Good evening, everyone. We are back to the class this evening. As I promised, I'm going to show the solution of the business combination question. I'm sorry, the solution of the group accounts. So I'm sure you all are gathered with your writing material and you are ready to listen. Like I said, the solution is not that difficult. It's the way you apply your reasoning. So every one of us, we should all be observant and listen carefully. If you had solved it before, you would ask some questions. If you have not, then listen carefully. Maybe after now, you'll be able to understand it more. So I want everybody to pay attention to what we're going to solve. Yeah. Yes, the question is there. You can read the question by yourself, but I'll still read it so that everyone will follow. In case you did not watch the question video. Professional exams solution, group accounts. Question 3, complex group consolidation. Group structure. Omega PLC parent, 75%. Owns Sigma, 75%. Sigma Limited, that is subsidiary. Then Sigma Limited owns 60% of Delta, sub-subsidiary. And Omega PLC holds 15% direct interest in Delta Limited. The acquisition dates of the two companies were the same day. This is the acquisition data, Sigma Limited. Consideration transfer, 90 million. Fair value of net assets at acquisition, 80 million. NCI, 25 million. Delta Limited consideration transfer, Sigma, 60% of fair value of net asset, 36 million. Omega, direct investment, 15 million. Fair value of net asset at acquisition of Omega, 60 million. And then NCI, 15 million. Earlier, there is a statement of financial position in million. That's one, where we have Omega, Sigma, Delta, assets side and liability side, Omega, Sigma, Delta. So we have seen the total assets of each of the companies and the total equities plus liability of each of the companies. They are all shown there. 3. Post-acquisition data. Year ended 31st December 2023. Profits after tax. Sigma, 20 million. Delta, 15 million. Dividends paid. Sigma, 5 million. Delta, 3 million. Intercompany transactions. Credit sales still outstanding. Sigma sold to Omega. Sold goods 20 million, cost 15 million, half remained in Omega inventory at year end. Delta sold to Sigma. Sold goods 10 million, cost 8 million, all remain in Sigma inventory. Additional information. Plant, fair value, uplift at acquisition, Delta 10 million, Sigma 12 million. Remaining useful life, delta, plant, 5 years, sigma, plant, 6 years. Goodwill impairment, 20% of goodwill at 31st December 2023. Required. Calculate goodwill arising on acquisition for Sigma Limited and Delta Limited. Include treatment of NCI. Compute post-acquisition profits attributable to parent, NCI. Include adjustments for unrealized profits and depreciation to amortization of fair value uplift. C. Prepare the consolidated statement of financial position of Omega Group at 31st December 2023. So these are the requirements. We are going to solve the question, or rather, I'm going to show you the solution to the question. So far, do you understand the question? Let me know if you understand the question. We have 3 people that have logged in. Do you understand the question? Yeah, I need to know if I continue. Can you hear me clearly? Can you hear me clearly? Yeah, let me know if you can hear me clearly so that I know I can continue. Or if I didn't see anything, I will continue. Okay, so we start by note 1, group structure. Omega in Sigma. Omega is the ultimate parent. So Omega in Sigma. Omega bought direct shares from Sigma, 75% of Sigma shares. Omega also invested in Delta directly, 15% of Delta shares, and Sigma invested in Delta, 60%. So what it means is that Omega has part of Sigma's interest, 75% of Sigma's interest in Delta. So Omega in Delta is 45% indirect interest. So since he has indirect interest of 45% and direct interest of 50%, the total Omega interest in Delta, which is effective interest, is 60%. That's 75% times 60% plus the 15% gives you 60%. Mind you, this is not the control that Omega has in Delta. Like I told you before, the control should be 60 plus 15. 60 plus 15. That should be the control. The total control, this plus this should be the control. But the effective control is 60%. Therefore, the effective NCI is 100 minus 60, which is 40%. So we start, we'll continue with note 2. Note 2 is unrealized profit. So sit down to Omega. Sigma sold to Omega 20 million, while the cost is so between the cost and the sales becomes the profit. And then after that, goods were still in Omega as in sold. So what it means is that only half of it is unrealized, half has been realized. So the difference is 5 million divided by 2.5 million unrealized profit. So I will share it between the remaining of the group and the NCI. So it will be 70% of this gives you 1.5 million, while 50% will give you 600 million. So this is going to be the group and the NCI, and the credit will go to inventory. So that's it. Now, if the data Sigma, the test of data to Sigma, also lose what is in the to some aspect, and all of them were still available. None of it sold. So the difference between the profit. So this on the profit also to the group and to NCI. But take note that it's like at the source of share that sold to Sigma. The group the profit is in that sold in the profit. So the share of the group profit is the 60%, not 70%. The 60% effectively in the source of share has the share of the group. So the group has 1 million as share cost, and the NCI will be that is on the source of share, the NCI, which is 300,000. Then the inventory will be credit to the credit here, and credit, so that it will be seen. Inventory credited. Yes, credited, as the case may be. Okay. Yeah, the credit has come. So that's how the unrealized profit has been handled. So we'll go to note 3. Note 3. Yeah. Note 3 is talking about post-acquisition profits for consolidation. We have Sigma, Beta, and then total. So the profit made by Sigma, according to the question, is 20 million. 20 million. 20 million. The profit made by Beta is 15 million. Gives us a total of 35 billion profit. Then you look at the depreciation. The depreciation of the item is, let's go to the question and then look at the depreciation, what the depreciation said, what they said about depreciation. Okay, plant fair value uplift at acquisition. Delta 10 million, Sigma 12 million. And the for Delta is remaining 5 years. For Sigma is 6 years. So Delta will be 10 divided by 5, and Sigma will be 12 divided by 6. So that's why we have depreciation for the Delta 10 Sigma 10 divided by 5 gives you 2 million. Delta 12 divided by 6 gives you 2 million. We are using straight line method. So we have total of 4 million. Total of 4 million. So if you net off the depreciation from the profit, you have 18 million here and 13 million here. That will be profit after deducting depreciation. So the unrealized profit here is 2.5 million. So you remove it for Sigma, and for Beta is 2 million. So you remove all to have adjusted profits of 15.5 million for Sigma and 11 million for Beta. Then what you have to do now is that adjusted profit, you have to divide it between parents and NCI. So for Sigma, you take 75%, which is accruing to the parents, and for Beta, you take 60%, which is accruing to parents. Remember the effective interest. That's what we are using. Then for the NCI, 25% for Sigma and 40% for Beta. So we also look at the dividend that was paid. Dividend that was paid for Sigma, it will be 75%. Sorry, let me change the 100% to 75%. The 100% I have there should be 75%. Yeah, 75%. Okay. Okay, 75% here, and then 60% here. Then NCI will be 25% and 40%. So we are looking at the retained earning, the post acquisition retained earning. Let's go back and see what it was. Okay, this is dividends for these 5 million for Sigma, and Sigma paid 5 million and Delta paid 3 million. So that's what we are looking at. So that's what we divided. Then consolidated post-acquisition retained earning and NCI will be share of adjusted profit minus share of dividend. So it will be this minus this to give you this, and this minus this to give you this. Here, this minus this to give you this, and this minus this to give you this. So I hope you are seeing it. 11,625,000 minus 303,750,000 for Sigma to give you 7,875,000, and then 3,875,000 minus 1,250,000 to give you 2,625,000. The same goes to this place. This 6.6 million minus 1.8 million to give you 4.8 million, and 4.4 million minus 1.2 million to give you 3.2 million. Of course, this is always the total side. Now let's calculate the goodwill. Note 4, goodwill computation. We have omega in sigma, omega in delta, direct, and sigma in delta. So purchase consideration was 90 million for, that's what omega used to buy sigma, and omega used 15 million to buy delta, and then sigma used 36 million to buy delta. So this is the acquisition. Then a NCI attributable 100% to omega. Listen, this question is a little bit complicated because of the provision of NCI and provision of purchase consideration, and then provision of net asset. Unlike before, where we calculate the net asset based on the figures from the statement of financial position. In this case, net asset has been given, so we are not calculating it. What again? NCI has also been given and purchase consideration has been given. So please take note that it's going to be a more complex situation. But luckily for Omega, it's only him. There is no two companies that bought. So it's only Omega, sorry, for Sigma, it's only Omega that bought in Sigma. Then for Omega in Delta and for Sigma in Delta, we are given the same NCI, one NCI as at that date. So we're going to share it in proportion of the acquisition. What it means is that in that NCI of I think 15 million, we're going to show it in proportion of 15 is to 60. Since Omega acquired 15% and Sigma acquired 60%, it's going to be 15 is to 60. So listen, the apportionment will not be 15% of 15 million and 60% of 15 million. If you do that, you will have less than 15 million NCI. So that is why it's going to be in proportion. So what we did in order to arrive at the share of Omega in Delta and Sigma in Delta is to say 15 plus 60, that is the total value that was acquired in Delta. That 60, that 15 million is equal to 75% of Delta's net asset also. So what we did was 15 over 75 times 15 million and 60 over 75 times 15 million to get 3 million and 2 million. So if you add the two, you see that we have that 15 million. So I hope you understand what we did there. If you don't understand, even if you are not watching the video now, whenever you watch the video, ask in the comment section. I will explain how it goes. Then we have a total of this will give you 115, and total of this will give you 18 million, and total of this will give you 48 million. So we also look at the fair value of net asset at acquisition attributable to the acquirers, So 80 million net asset was acquired by Omega in Sigma. As at the date of acquisition of Delta, their net asset was 60 million. And it is this 60 million that Omega acquired 15% and Sigma acquired 60%. So we're also going to prorate it between 15 and 60%. So the same way we did the proration of NCI, that's how we did the proration of the fair value of net assets to have 12 and 48. If you add the two, you have 60 million. Then additional increase on 100%. So listen, in this question, I want to tell you that I purposely treated the plant uplift as where is it? Okay, 10 million and 12 million as additional what's it called? Net asset. Additional net asset. That is why I want to explain it. In other times, you don't treat it as additional net asset. You look at it as net asset, as part of the net asset that has already been given. Let's look at the net asset that was given. The net asset 80 million and 60, what is it? Yeah, 60 million. So you can treat it like that, and that is fine. But I said additional. So I am adding it to the net asset that was already shown. But if you are not told like this, don't consider it as additional net asset. Consider it that the reason why the information is given is to know the depreciation that should be applied. To know the depreciation that should be applied. It's not going to cause any problem for you. All you just do is apply the depreciation and don't use the net asset in the goodwill computation. And if you did not, the upliftment of fair value or additional fair value, don't use it in the goodwill computation. Only use the depreciation. Then in the consolidation, you will not also add it to the fixed asset or to the non-current asset. So that is the only difference. Okay, so this is where we are. So we split it to the plant uplift or additional increase in plant, 2 million and 8 million. Total fair value of net asset is 92 million. Remember, it is 92 million because we added the plant increase in value. If we did not add it, it would have been just that 80 million. It would have been just that 80 million. So in the computation of goodwill, we would have had only 80 minus 115, which would have given us a higher figure, additional 12 million in goodwill, which would have been 35. But in this case now, we've added it. So we have total fair value of net asset is 92 million. So you remove 92 million from the purchase consideration plus NCI to get 23 million. You also remove here, when you add it, you have 14 million. The same explanation goes here too. This 2 million may not have been there if you did not treat it as additional plant, additional increase of net asset. So you minus it from here to have 4 million goodwill. Then here you have bargain purchase because the net asset is higher than the purchase consideration plus the NCI. So you have bargain purchase, 48 minus 56 gives you 8 million. Gives you 8 million. Now we go to goodwill attributable to Omega. This one is goodwill on acquisition. Now we need to prorate the goodwill based on who owns the goodwill. Knowing that Omega interest in Delta is his personal interest, direct interest, which is this, and the interest he got through Sigma. So we are going to prorate that goodwill. Here, the 23 million is 100% attributable to Omega, and the 4 million is 100% attributable to Omega 2. But here, it's only 75% of this 8 million that is attributable to Omega, 75% of 8 million, which is 6 million. So the total goodwill will be 23 plus 4, that is goodwill. Why this one will go to bargain purchase? The 6 million will go to bargain purchase. It's not goodwill. You are not going to net it off from the goodwill, but you are going to recognize it immediately in the profit or loss. That is what the standard prescribes. So we continue. So the next one is goodwill impairment. So we look at the impairment. What did they say about the impairment? There is a place that said impairment, goodwill was impaired. Goodwill was impaired 20% as at December 2023. So we calculate the impairment of goodwill. That percentage, it will be percentage of this. So the impairment will be removed from the goodwill. The impairment will be removed from the goodwill. The other leg will go to the retained earnings. Okay. So that is the impaired goodwill is 22,800,000. So note 5, NCI. In Sigma, 25 million. In Beta, already used in competitive goodwill, so we are not going to recognize it. Only the NCI, look at the note here. Only the NCI in the immediate subsidiary appears directly in group equity. Any NCI in a subsidiary must first pass through the parent subsidiary before reaching the group, since the question already provided the NCI. Now, you see, in the other questions we solved in class, the NCI was not provided. We computed it. So it's part of the statement of financial position. So in such a situation, we recognize it. But in this case, it is not part of the statement of financial position. It is given in the question. So the first NCI is taken. The second one flows through goodwill computation. That's where we are going to get it. So it will not appear in equity. If it appears in equity, it becomes double counting. So we have a total of 25. Then we add the profit, 5.8. Where did we calculate the profit? Have we calculated the profit? Or still in the, okay, we'll look at where the profit is made. So if we add the profits, is 5.8 million. Then note 6, retained earnings from Omega, 150. From Sigma, 7.875. From Beta, 4.8. Then add bargain purchase, 6 million. The whole bargain purchase is only the part of the bargain purchase we calculated is attributable 100% to Omega, the parent, the owners of the parent. So that's why we are recognizing it here. We'll add it. Then we less the impairment, 4.2, to have 164,475,000. So the next one we will do is calculate group consolidated. So we now do group consolidated statement of financial position as at 31st December 2023. So we have assets. Listen, this thing too is not arranged in our normal statement of financial position. We have assets and then equity and liabilities. Cash. I think I should, let me check if I can move this thing correctly, because no matter how explained, some people might not understand it. Let me check if I can move it correctly. Oh. Let's see. Let me copy. Let's see. Is it going? For those who might be confused, okay, so if we do it this way, it's better shown. Okay, so let's go to the slide again. Okay, so we have equity and liability. Share capital, 200,000. You take only the parent own, 200 million, sorry. Retained earnings, we've already computed it. That is the value, 164.48. Loans, that's it. Payables, you are adding up. Now, payables, let me show you what they said in payable. Where is the sales? Okay. Now it says intercompany transactions, credit sales still outstanding. So it means that the payables will be less 20 plus 10, that is 30 million. And that's how the receivables will also be less 20 plus 10. So ensure that you remove the intercompany transaction. That is why payable is 57 million. If not, payables would have been 87 million, but we have removed that 30 million since it's still outstanding. Intercompany transactions are eliminated. So that amount that is payables and receivables will be eliminated. Receivables here would have been 80 million. We have removed that 30 million. Then NCI, of course, note 5 gives us NCI at 3825. And then we have assets, cash 60 million, receivables, that's additional, okay? Receivables, 60 million. Inventory, 90 million. Remember that inventory also required adjustment of the sales that was made. Let's look at the inventory. 60, the unrealized profits has to be adjusted in the inventory. Okay, let's look at what the inventory is. Inventory is 40 plus 20, that's 60, 95. 95, so you remove the unrealized profits of 5 million. That's where you have the, okay, that's okay, that's the 90.5. Okay, we'll remove out those ones from here. And then plant. We also added the, I think the 22 million. If not, plant should have been, let's look at plants. Plant should have been this plus this plus this. This is 50, 80. That's 295. 295 plus that we have what do we have as plant? 325. Then goodwill. is completed already, 22.8. So we have a total of 556.3. So our statement of financial position is balanced. So these are the adjustments that are required in order to solve the question. In order to solve the question. Hold on. Let's look at something. So far, so good. If you have any question, you ask, because all I'm trying to do is confirm some things, so that will not stop you from asking your question. Those two people available, do you have any question to ask? Yeah. So, there is a place that I needed to remove my picture so that you can see it, because let me go back and show you that place so that you can see it properly. Okay, here I'm going to remove my picture, the camera, for you to be able to see what is there. Good. Okay, so you can see it now. I'm sorry that I did not remember, as I said, I was going to remove it. I forgot to remove it. So we are not able to see it clearly. Plant 305. 305. Depreciation minus 4 plus 43. Okay. What do we have in the plants? Plants. Okay. The depreciation of plants. Okay, let's look at the question once again. So this is the unrealized profits. Is there any question? No question? Okay, so let me explain the plant for you. The total plant is 305 million. That's this plus this. Sorry, let me come back. Okay, so that's where the copying of the question is given the problem. This is 225, sorry, 225. Corrected it, question copied. So the plant is 305 plus that 22 million minus, let's look at it, 305 sorry,